Shares of Snap tumbling big this morning, down more than 6% as Snapchat's daily user base declined for the first time. CEO Evan Spiegel attributing that to the redesign of its app. The company did, however, post a smaller second quarter loss and a revenue beat. Brent Thill is a senior technology analyst with Jefferies. Aaron Kessler is an SVP of equity research with Raymond James. Good morning to both of you guys. Aaron, what is happening big picture here? I mean, with Facebook, we saw the core app disappointing user growth. Twitter, there's some concerns there. Now in Snap, we see this issue. Is social media peaking from a user perspective, perhaps? I mean, I know we got Instagram and others, but what's going on?
Yeah, and I think it is market by market. Clearly in the more developed markets, US, North America, you have seen more maturity in the core Facebook site, in Twitter to some extent, and clearly in Snap. And we think Snap's actually losing users or time spent as well to sites like Instagram, which has really taken off. So within Facebook, Instagram's growing really, really quickly. But yeah, I mean, if you look at North America market, you have seen more maturity. I think that's been evident in the stock's performance we've seen recently across the board.
So, Brent, what's going to happen then to the businesses behind these? One way of looking at it is, you know, the revenue is going to have to be impacted some quarters down the line once the growth isn't there as much. But maybe another way of looking at it is, hey, they've got this mature user base now. Now they can really monetize that. Twitter stock certainly seems to be reflective of that.
Yeah, I mean, I think to Aaron's point, you know, Facebook's taking share, Instagram time spent's going up. Snap is in a difficult position. You have pricing down 52% year over year. You're losing users. They've completely redesigned the app. My kids are playing way more Fortnite than they're spending time on Snap. And they use it as a messaging tool. They use it for time to understand where their friends are and send messages. They're not influenced by the ads. They're more influenced in what's happening on Instagram. We just think they're better stocks to own, like Match and a handful of other mid caps that we're recommending. So we're on the sidelines on Snap.
So, Aaron, the bear case for Snap has been that Facebook, which owns Instagram, has been rolling out many very similar, at times copied versions of its tools. And the worry has been that they are going to take those users away. What you're saying right now, what both of you are saying right now, is that that is actually happening. Where do you stand on the stock?
Yeah, so we remain cautious on the stock. We think fair value today is closer to $9 per share. You're still up right now around 10 times revenues. For a company that's not really growing users, revenue growth is slowing. We think about 30% next year. Has huge losses still, over $1 billion of operating losses. We think 10 times is too rich for the company. You could still say, yeah, there could be a buyer in there, which is probably holding it up, as well as maybe high short interest. But we think fair value is still about 20% lower, at least from here.
Hey, Brent, obviously the prince sees something he likes. How could you spin a bullish narrative if you had to?
For Snap, you know, I think the bullish narrative is they brought a 2-decade veteran from Amazon and Tim Stone to be the CFO. He guided many aspects of Amazon's business. So I think the first kind of silver lining is Tim. The second is this is the first quarter they provided quarterly guidance. And we've been writing notes for almost a year saying that they need to provide guidance. There's only one company we cover in internet. It's Google that doesn't provide guidance, and Snap is not Google. So, you know, we think there are a couple steps in the right direction, and it comes in with adult leadership, and we think that that's great. And so clearly for Tim to leave Amazon to go to Snap, it suggests that he believes that there's something there. And I think, you know, the mistake many of us made in the past was writing Twitter off. I don't think we're entirely writing Snap off, but they've got a lot of work to do.
Although, Aaron, that raises an interesting question. I mean, from the beginning, even pre-IPO, Snap was insistent that we're camera first, that you don't judge us on network effects the way you judge growth over at a company like Twitter, that it's about almost closed circles of friends. The silver lining that Brent's referring to, can that be addressed tactically, or are there fundamental strategic errors that were made long ago?
Yeah, I mean, I think to Brent's point, it is largely, I think, we view it as a messaging company, still more of a chat app. And I think historically, we've seen even with Facebook, it's tough to really monetize chat apps well in the landscape. And they don't really have the news feed like a Facebook. And so they have a discover side of the content, but we don't think that's used quite as much. If it's really just being chatting among teenagers, that's tough to monetize. And so that's a potential structural problem. How do you fix that? May need another revamp of the platform longer term as well.
Brent, here's the thing about Snap that I still don't get. Before their IPO, they were talking about themselves as being a premium app. They were really focused on developed economies, on iOS. They didn't really so much care about what was going on in the developing market. Didn't care so much about Android. Now they're talking about, boy, we neglected Android. We're all in on Android. And by the way, we're into programmatic advertising, not so much just the premium stuff. How has the story changed? And is it clear to you exactly where the sweet spot for Snap is audience and revenue-wise?
They got to get this Android problem fixed, right? It's the majority of the phones, and they're going through a big revamp on Android. So that's, I think, key for them to get back on track. They have not put a timetable on when they're going to launch the Android version, the new revamped version. We would anticipate it's sometime this year. They've been working on it for quite some time, and speaking to them offline last night, they want to nail this before they release it. So I think they got to get that out. The rest of the world's growing. The Asia-Pacific region is actually, I believe, almost bigger than the European region. So, they're seeing good growth outside of the U.S., but Android's going to be the key, in our opinion, to get them out and to get better traction. I think the other thing too is just, again, it has to go beyond messaging. Advertisers aren't going to pay for this. There are big brands that want instantly shoppable commerce, and they're going to Instagram. And I can go through the list of conversations we've had has been overwhelming. So, again, I think our view is there's just massive share gains that are happening on the Instagram side. No one in social is doing well, right? All these companies are not doing well right now in terms of losing users. So I think there's a little bit of fatigue, but we think ultimately this will favor Facebook as it comes back over the next year.